market was obviously mispricing Intel because the stock had a 30-some-odd% run-up into the print, and today it is getting crushed on the outlook. Christina Partsinevelos is sitting at the desk with us today to sort of give us a sweep of that. You know, expectations, I guess, were up going in because of the stock appreciation.
You guess. Going from $32 early September to $50 in December, the expectations were definitely there, and I think it was reset after this earnings report. And much of it had to do with the Q1 guidance and not Q4 performance, because it wasn't that bad Q4. They actually did pretty well, but it's the guidance that was 18% a lower quarter over quarter, lower than every single analyst estimate out there. The company, so I caught up with some management on a call before their earnings call, and they listed three things they reiterated on the call. They blamed Mobileye because they are the majority shareholder. Mobileye does autonomous driving technology. They blamed their programmable chips department, which is a little bit weaker as more people shift their money towards AI-related chips and maybe away from other specific ones. And then lastly, the foundry business. So that's actually an argument for the bears. Hey, those three items that they listed are not part of their, let's say, core business. So it's an opportunity for Intel to turn themselves around. But then you have the bears out there that's saying, how long do we have to wait for this transition period?
Well, Stacy Rasgon of Bernstein says, quote, how many times can Intel push the reset button?
Exactly.
Right?
So now I think Stacy's pushing it to 2026, I think, in his note. But a lot of people are just staying on the sidelines, hoping for this change. And there's still some, hope. That's the key part with Intel. They're still on their roadmap for their product launches. They signed a new foundry customer. But how long do you have to wait? And so to your point, starting this conversation, people got into the stock maybe not realizing the timing of this turnaround and the timing of things to progress, even though Intel promises that every quarter after Q1 will increase incrementally, sequentially, as well as year over year in 2024.
Hope is a dangerous thing.
Well,
said Red in Shawshank.
Yeah, but it depends on the timing of entry.
You still have
From
hope?
this point, I do. I don't think we're going to have a year like we do. Okay, so first of all, you're totally right that expectations were too high, and that's why I'm nervous about next week. So why do I have hope?
Yeah.
Because we need to remember that what Pat Gelsinger is doing is taking a strong page from Jamie Dimon, which is under promise, over deliver. Right? So when he resets these, we need to remember they actually just beat Q4 earnings by 23%. And so I don't really, and I was actually surprised by the magnitude of decline today. Just in that, I thought data center had already been accounted for. Yes, I knew there was a lot of hope in the stock. The thing's up 100% since February last year. It was down at 23. It's at, it was at 47 last night. It's up about 100% in the last year. That says there's a lot of emotion, a lot of stock in there. But why did I stick with it last year? Because we thought they can return to $2 of earnings. This gets back to the hope. They can return to $2 of earnings. They're on track to do that. Last year it was trading at 12 times when it was at $23. Now it's trading at 25 times.
Yeah, I figure you take the gift of the stock appreciation and say, God, I was waiting for this and bounce.
We might get there, but I'm not selling it down 10% today because I think that this is a little bit overdone. I think it was actually kind of a fine quarter. I think they're doing, at this point, more than I expected they would be doing last year. Things are getting better, faster, but it can't be a straight line, right? Not everything's seamless. But I really do think if we look back since Pat Gelsinger's been there, he has under-promised and over-delivered almost every single quarter. There might have been one where it wasn't quite perfect.
I don't have in front of me what the performance of the stock is since Mr. Gelsinger came back, but maybe we can.
It's not good.
I know it's not, but
Josh, it's flat.
We can work it up in the control room, perhaps, if we have time, guys. If you can do it, great. If not, totally get it. What do you want to say?
Let's compare it to the sector.
Okay, but
hang on, we can do both. But Christina,
wait, compare Intel to the sector. But just to your point, February 21st, the Foundry Day might actually be an opportunity to get out if you would, because they may announce a new customer. I don't know this, but there's an opportunity to see the stock regain a little bit. Comparing it to the sector, Intel actually outperformed at the SMH and the stocks over the last 3 months leading into this earnings report. SMH is a whole other story that it may be in overbought territory, but. It's part of that category when you divide the compute versus non-compute, and Intel was sort of in between both, and now we're seeing that negative reaction to this weakness in data center revenue, loss of market share to AMD too.
Christina, you know my thesis, which is that the overall semiconductor industry has bottomed, okay, and that we're seeing growth in end market demand, whether it's laptops, whether it's smartphones. Now, there's a thin line between hope and expectations, all right? My expectations are that it has bottomed, and it will eventually support Intel and Qualcomm and NXP. But here's the thing. When a market or an industry bottoms, not everybody comes out at the same time. It just, there's only so many incremental orders. The first incremental orders have gone to Taiwan Semi, right? They're the biggest foundry. The incremental orders are not going to go, I'm sorry, Jenny, to Intel, which is just getting started in foundries. But if the expectation is correct that those end markets have bottomed, and I really think based on economic strength they have, then it's just a matter of time before the positive news that you saw at Taiwan Semi come through to Intel, come through to Qualcomm, come through to NXPI, taking nothing away from AMD or Broadcom or NVIDIA. How do you feel about what I just said?
I agree, but then you are taking that thesis that this is longer than anticipated, that you have to stay on the sidelines for a little bit longer. And then even for AMD, AMD is on Tuesday, right? You're seeing the stock down ever so slightly, down less than 1% today. Why is that? Because AMD has a grand exposure to PCs. You saw weakness in servers for Intel. So this bottoming is happened here, Q1, whatever you want to call it. I agree with you on that. I just wonder, how long do you have to wait for that? That seems to be the question that from investors' point.
Okay. I'll go back to the Shawshank thing. Only because I think it fits, is that, Jimmy says, why bother having to tunnel through the wall to, crawl through 5 football fields of foulness to get to the other side when it's uncertain what's going to happen there, where AMD, Broadcom, NVIDIA, those are proving to be, Taiwan Semi, others are proving to be the places to be. By the way, to answer the question, thank you, Control Room. We have it down 29% Intel since February 15th of 2021.
When he took over. Okay, interesting.
That's great.
It's not great, it's sad.
Right? You're willing to tunnel through the wall, to climb through all this garbage, and
it was cheap the whole time.
And hope that the other side's going to be better.
Yeah, and Josh, if I'd sold when you and I were having an argument about it last year and you were telling me it was irrelevant and nobody cared about Intel anymore, and I said to you, yeah, but they're still doing $60 billion in revenues, if I'd sold, I would have let 100% return on the table, which is why you start every day. Don't even, we'll catch up on that later. It's going to turn into a bickering match.
Josh, go ahead.
Jenny, no, it's not. No, it's not.
Go ahead, Josh.
No, it's not. Listen, 3 years ago, we were having debates, and just generally, Intel was always a value stock, always cheap. Here's the problem. 3 years ago, NVIDIA's expensive, Intel's cheap, therefore, blah, 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 cash flow, et cetera, buy Intel. Intel is down 3% over the last 3 years, ending yesterday. NVIDIA is up 350%, but the semiconductor sector is up 62%. You literally could have thrown darts, and there is not one other large cap semi company that would have been worse.
But here's the answer to Scott's question. Do you really want to slog through it? The reason I slog through it is because this is in our disciplined growth strategy, where there is a very, very disciplined process, which is look for companies with a 5% or better free cash flow yield where there's earnings growth on top of it. So I'm going to have a whiff on an Intel, but I'm going to have total home runs on things like Palo Alto and United Rentals also. And by maintaining that process, you miss some, but you also hit some huge home runs. And so you adjust the positions in the portfolio, you get a black eye here or there, but you also reassess, why do I own this every time? So last year at this time, we thought it had a lot of upside, and it did.